This is just the reminder that the Chancellor, in last year's pre-budget report, introduced this special loss relief, which is just for 2 years. If you are a company and you make a loss in an accounting period ending between 24 November 2008 and 23 November 2010, then if that loss exceeds the profit from the previous year, you can make a further carryback for 2 years. But the carryback is limited to £50,000 for the 2 years, not per year, for the 2 years, and it's against trading income. For unincorporated businesses, the same rules apply, but for the years 2008, 2009, and 2009, 2010, and that is continuing. If we look at an example of a company that makes a loss, here we have a company. In 2009, it's made a loss of £60,000. In 2008, it made a loss of £120,000, and its year end is post-November 2008. So in 2008, what can it do with that loss? You can carry back a loss of any amount 1 year. It's unrestricted for 1 year. So £100,000 of that loss goes back against the profits of 2007. And the extra, because it's an accounting period ending after 24 November 2008, then you can carry back up to £50,000 to the previous year. Well, we've only got £20,000 less. So in the example, we are carrying back £20,000 to the previous year. And that's the extra bit of loss that the Chancellor is granting temporarily. In 2009, we've made a further loss of £60,000. And so what can we do with that? Well, again, we've got 1 year carryback unlimited, but we have no profits in the previous year. And so we have to look to the special relieving provisions. And we see we've got profits in 2006. We can carry back up to £50,000 of that loss. Even though the loss is £60,000, we can only carry back £50,000 to 2006. And so what the Chancellor has given us here in introducing this extended loss relief is a further £70,000 in this example to carry back to 2006. And the remaining £10,000 is carried forward against profits of the same trade. Now, when you're carrying back 2 or 3 years, this extra bit, it doesn't go against all profits. It goes against your trading income. And there's some interesting planning here, because if you have other income, especially for individuals, it goes against trading income only. So if you're an individual or partnership or an LLP, and you have trading profits and other income, your loss carryback is restricted to the trading income, which means that your other income remains in charge to tax at lower rates. And there's some interesting planning to do when you're looking at how this extended loss relief works. This wasn't in the pre-budget report, but it was in a consultation, in a document issued in October this year, just a few weeks ago. And the document says that as of the 21st of October, sideways loss relief will be restricted in cases where there is a tax motive. Now, what is sideways loss relief? Sideways loss relief is the tax relief given if an individual or an individual in partnership or in an LLP makes a loss in an accounting period. That trading loss can be set off in a number of ways. First of all, it can be set off against other income in that tax year or total income in the previous tax year. And once that set-off has been made, if you have excessive loss, you can set it off against capital gains in the same tax year or capital gains in the previous tax year. So it's quite a useful loss to have around. If the loss has been made in the first 4 years of your trade, so if your partnership, let's say, has only been trading 2 years and you make a loss in the second year, then it can be carried back 3 years and set off against your other income in that 3 years ago. And if you've still got some loss left 2 years ago and then 1 year ago. So it's a very useful loss that has been used in tax planning. There have been a number of schemes which are based on this loss. Many of the film type arrangements, some of you may have heard of sole trader schemes, where an individual is contracted to make a film and he funds it with the help of some non-recourse finance, and that individual makes a loss, and the idea is that he can then use that loss against his other income in one of those ways. And the idea is that the tax refund is greater than the real contribution to the film. It's not only films, it's things like biofuels and all sorts of things. There's been schemes around that have been exploiting this relief. What the Chancellor has said, and what the document says, is that there is no sideways loss relief if in fact the loss results is as a result of relevant tax avoidance arrangements. So what is a relevant tax avoidance arrangement? Well, it's an arrangement where the main purpose, or one of the main purpose, is obtaining a reduction in tax liability by means of sideways loss relief. So it's a little bit subjective. They do go on to say in the document what they will look at. If in fact you are a trader and you have always traded in making widgets and you continue to do that trade and you make a loss in that trade, you won't be caught by these rules because that is your trade. The reason you made a loss is not tax motivated, it's as a result of carrying on your business. So you don't need to worry about these rules. However, if you make widgets and you decide to participate in a trade that is buying and selling biofuels, let's say, or planting trees in Uganda or something like that, and you make a loss more than your contribution, then the revenue will look to impose these rules and you won't get relief for that loss. Why am I mentioning it? Well, there have been a lot of schemes around, and I'm sure that some people in this audience have been approached, and even a few weeks ago after this document came out, I was aware of people being approached to enter into sole trader schemes, which of course very unlikely that the particular scheme would work. So if you're approached and somebody says to you, I've got a great scheme which creates a loss that you can then use, think very carefully and talk to us about it, and we'll see if it falls within these new provisions.